you're looking for indications that it's likely to draw down here. Go back to these two purple lines. That's the regular trading hours gap, opening range gap of February 4th, 2026. When it went above that old high, it went to a gradient level. I'll let you do it on your charts. Okay, just throw your fib down, put the eighths on and quarters on, and you'll see it's trading up into that. And now it's in the upper half of it between this purple line and that purple line. And then it gives up the ghost quickly. See that? In here, we start to consolidate a little bit. And in that little area, right in here, there is inefficiencies. Now, you can't see the inefficiency I'm anchored here because it's there. See that? That's the 15-second fair value gap in a sell-side imbalance, buy-side inefficiency. In other words, the market's showing it wants to drop. It left an inefficiency. And now this is a chapter that I'm amplifying in the book. Okay, so in June of this year, you'll have volume 1. And I have a chapter in there trading the 60-minute candlestick or 60-minute range. Okay. And by knowing what I'm showing you here, it'll help bridge the boring stuff and the things I can't adequately explain in text format or in a static picture. It doesn't communicate as effectively. So when the market's moving lower like this, we had a failed run above this high here, inefficiency there on the 1-minute chart. And then we're about to break this low and aim for that lower sell side liquidity pool. That's this one over here. That's these lows here, okay? You're looking back over the London session for a relative equal highs and lows, by the way. So again, very, very simple stuff. I've already taught this before. It's not complicated. You don't have to have 82 PD arrays, okay? You don't have to have every little bell and whistle. This is just simply looking for liquidity at a time of the day when the market's going to run. So you have odds in your favor that sustained price runs are going to materialize and they're going to run continuously. And you're looking for liquidity. So it's time of day, session when volatility should come in. So that's fuel. And it's going to go to power cells, okay, in the form of liquidity. These little anchor points that the market's going to gravitate to. That's the lifeblood of any market. It doesn't matter what you're trading. Without liquidity, you have no volume. Okay, so I'm ahead of the curve. All you volume guys out there, I'm already looking for something that your volume bars aren't even going to print yet. I'm looking at where the market's going to draw to. Then you're going to look at data that says how many people bought or sold at a particular level. That's all hindsight. I'm looking at where it's going to go to next. Okay, so all you need to know is where it's at now, where it came from. Well, it came from this buy side liquidity raid. After 7 o'clock, it took out that buy side. It's likely to draw to where? To these relative equal lows. Here. So anyone that was lucky enough to get short here, they came right back for those guys. And it failed to get to the upper half of that. Or I'm sorry, not high of it, but it went in the upper half between this purple line and that. So if you put a fib level 50% right there, it's above that, but then quickly left it. And then we get into this small little consolidation in here. So what is it going to aim for next? It could go up here and hit the low of that regular trading hours opening range gap low, that purple line. It could do that. Why didn't you expect it to do that? Watch. We have liquidity resting right here, and we have a relative equal lows here. And it quickly ran away. So buy side's been taken. Who wants to sell short to buy stops? Smart money. So if they're selling short above this high to resident buy stops, all the liquidity in the form of these highs being absorbed in here for breakout purposes or protection on shorts, it doesn't matter to smart money. They just know that the orders are resting there, and they're going to keep throwing shorts, sell orders in there to pair up as many as they can. So where would they want to get out at? If they're getting short, if smart money's now short here, where would they want to get out at a lower price? So where is the most advantageous levels for lower prices where people want to sell at a lower price while price is at this level here. Old lows. That's this low here. It's close proximity to this. And then you have these relative equal lows. So inside this consolidation in here, I immediately am looking at the 15-second chart. Now, so we're in this little area here on the 1 minute chart. This level is where the next draw is. And it doesn't look like there's anything here because it's on the 15-second chart right there. Okay. So looking at that in terms of price action, we can see that it's dropping lower. And if the market can trade up into that, we get an institutional order flow entry drill there. Make it a little bit bigger. This guy's always got his eye on me. Look at him. Sell side imbalance, buy side inefficiency, institutional order flow entry drill. As soon as it trades up into that, we want to see if we're bearish. My fair value gap, okay, it needs to show a willingness to stay open. That's the highest probability fair value gap. If you're trying to sell short, you want to see the upper half not traded too. Okay? We're not like the rest of these people out there that say, well, imbalances always existed, blah, blah, blah. Listen to the logic I'm teaching you. If a market's weak, if it's heavy, if it doesn't want to go higher, it's not going to be concerned about closing in this one single pass. It's going to trade up into it, maybe, like this. That's institutional order flow entry drill. I can tell you when they're going to happen like that. I've done it many times in trade examples where I'm recording it with. But the point is it trades up into it, and we want to see that upper half of that be respected. Can it wick into it? Sure. We don't want to see a body left in it. And does it do it there? Yes. Trades lower. Comes right back up again. Trades just shy of getting into that inefficiency here, and then breaks lower. Now here we have a beautiful illustration of what I was talking about to Kit, where I saw all day long. This is Robin's Cup winning type stuff. This is beat the guys on on blast that try to come at you. Once you learn this skill set, you can trade anything, any asset class, any time frame, and mop the floor with them. Order block, change in the state of delivery. Perfect. This is a 15-second chart, by the way. So if you went in there and you use this, you look for what? Price to show a willingness to drop. It does. Volume imbalance and inefficiency, that's continued to there. Small little separation between the two, but that's an inefficiency. Market trades up into this. Bang. Now what do you have? You have this low that's almost ready to get ran out. Inefficiency. We're trading up into here. You now can enter getting short. Second opportunity in here. Trades up into it here. That sells off. On the 5-second chart, you can see the same elements being illustrated here.